Welcome back, everybody. My name is Charles. I'm the CEO of the dYdX Foundation, and we are very happy to gather as a community the crypto analysts, investors, token holders, and all people passionate about dYdX for this monthly call, analyst call of dYdX. So today we have a special guest, Eddie Zhang, president at dYdX Labs. But we will go through an agenda which we will see in the next slide to kind of share with you an update on what are the metrics, how the protocol is evolving. As we usually do, we will go through a market and macro context. We will look at the protocol overview. We will look and double click on the dYdX token, its metrics, how they are evolving. As you know, one important initiative at dYdX, which is in place for months now, are the dYdX buybacks. So we'll take a snapshot of where we stand there. Eddie is joining us to give us an update on the dYdX roadmap. And we will also go through some recent strategic initiatives which have been essentially enabling further dYdX and bringing dYdX into the hands of more users. So very excited about this monthly update, and let's get started. So as you know, the market of crypto derivatives is the world's largest market when it comes to crypto. But what we've seen is really an acceleration of the migration from off-chain derivative trading to on-chain derivative trading. And this growth of on-chain activity for crypto derivative has been really growing strong. If we compare to the average of 2024, where we were between 150 to 250 billion range, we've seen those numbers growing strongly. And what it means, and if you want to read between the lines, is that the crypto derivative market is really the dominant engine for the crypto market structure. This is where a lot of the price discovery is happening. And essentially, the cake of on-chain crypto derivative is growing, and dYdX is extremely well positioned in this market. Having this market growing strong is also attracting, as you've seen in the news, a lot of new competitors and new players into the space. dYdX being on this market since 2018, it's not the first time the team and the stack see additional players coming into the industry, and we welcome them, and we also see that as a testament that what we've been building on for years now is really something of interest and bringing the greatest mind in the industry. So I guess the takeaway from this first slide is really showing how the industry is growing, how the on-chain perps trading is growing, and as I said earlier, dYdX is very well positioned on that. Josh, do you want to tell us more about the dYdX protocol overviews and run us through those numbers?
Yeah, for sure. Happy to. Thanks, Charles. Everybody, just quick overview of dYdX protocol. So when we look at historically all versions of dYdX, we are currently at 1.52 trillion in lifetime volume, which is absolutely huge. I think when you compare us to, other comps out there, dYdX has been around for many years, and I think the sheer amount of volume just goes to show how popular it's been kind of in past and currently. When we look at protocol fees, this is specifically on dYdX chain. Since chain launch, approximately 2 years ago at this point, the chain has generated almost 62 million in protocol fees. Of that 62 million, a significant percentage of those fees have gone directly to stakers of the dYdX token. Again, dYdX is a layer one with its own validator set. By virtue of staking a dYdX token to a validator, you are entitled to a share of protocol fees based on how much dYdX you are staking pro rata amongst every other staker, which is fantastic. Again, I highlighted this last time, but I think one of the key competitive advantages or benefits of holding and staking the dYdX token is that your staking rewards are not inflationary. You're actually getting a percentage of protocol fees, protocol revenue, which is fantastic. Just in terms of listed markets, no major changes or updates since last month's call. We continue to list high in demand markets, which satisfy our kind of automated market listing criteria. Currently, we require a few centralized exchange inputs. We also have the ability to list various DeFi assets, assuming that they also meet the relevant criteria, which is a specific amount of volume on the given pool. or pools, pardon me, just to ensure that, prices are quoted accurately. When we look at dYdX holders, this has been trending up, since the launch of the chain. I think that's a function of one, trading rewards at the protocol level, which have since been wound down kind of in the last 30 days, as well as the surge incentive program. Both of those feature or initiatives kind of do a great job of getting dYdX into the hands of active participants. I will note that, there was a broader issue over the weekend with respect to dYdX being offline for a few hours. Happy to note that volumes and OI have since stabilized, which has been extremely positive. I will note, however, that Megavolt TVL has decreased by about 4 million, and we're currently at about 8.5 million in TVL. There was a broader hit to P&L, which we'll cover later, and happy to go into the kind of issues that occurred over the weekend a little bit later as well. I think just in terms of doing a deeper dive on trading volume, momentum remains consistent. I think the key takeaway here is just, when we look at volumes post incident, I would say we've returned to kind of normal levels that existed kind of before the incident, which is extremely positive. I think when we look at this, in the broader timescale of this year, or even, since chain launch, things are still trending in generally a positive direction. Market share, I would say, has been quite stable over the last, 3-4 months. Definitely encouraged by the amount of product releases, which I'm sure Eddie is going to talk about, and how those could potentially contribute to an increase of volume in the future. When we look at what assets are effectively contributing to dYdX's volume, I don't think there's any surprises here, but again, the majority of volume is coming from majors, BTC, ETH, and SOL. Cross-margin assets are then assets. Again, there's two different classifications of assets. Certain assets, the long tail, are isolated assets. So they have, an isolated pool of capital, so traders don't blow up their accounts. Assets, when they hit certain thresholds, are added to cross margin, so people can trade across assets with the same collateral, which is fantastic. Again, I would say the majority of non-majors volume is all coming from cross margin. We see about, a few percentage in long tail assets in terms of overall volume. In terms of protocol fee generation, I think just a high level overview of how the revenue share works is probably sufficient for this call, but super helpful to remind people where protocol fees are going. So specifically, every time that the exchange gets $1, this is after affiliate payments, but 25 cents is sent to Buybacks, 25 cents is sent to the Megavault, 10 cents is sent to the Treasury subDAO, and 40 cents is sent directly to stakers on a pro rata basis. When you think about the sheer amount of fees being generated, which again, 47.3 million going to stakers, earlier on in the chain's launched, 100% of fees were going to stakers. The community then, in the last, year or so, has been tweaking the revenue share distribution by virtue of submitting governance proposals. I think today we are at like a healthy balance of, the community is putting money back into the dYdX token, it's funding the Megavault, and it's also securing long-term funding for OpEx or other DAO initiatives by virtue of some amount of revenue share with the Treasury subDAO, which is all, I think, very good. More specifically on the Megavault, I think just specifically, you see like the outage contributed to a large decrease in P&L, which, it's not our intent to hide any of that information. TVL decreased by about 4 million because of the outage. I will say that on the positive side, because 25% of fees are currently being routed into Megavault, the APR and the amount of assets available to current depositors in the Megavault will increase over time, which, like, if you look at the chart, it is steadily increasing hour by hour, just because, again, 25% of protocol fees are getting piped into the Megavault. Just in terms of, again, what the Megavault is doing, it's effectively acting as a mini AMM on top of cross-margined assets as well as long-tail assets. And it's really aiming to solve the chicken and the egg problem with protocol liquidity, where an asset gets launched, the Megavault then spins up a sub-vault, or Grief spins up a sub-vault, who's the Megavault operator, to effectively provide liquidity on the asset, so traders, market makers, whatever type of market participant can come in and actually trade the asset. Charles, over to you, I guess, just for some highlights on token metrics.
Yes, absolutely. So on the token metrics side, we, as mentioned earlier, we keep seeing a growth of token holders, which is a very strong sign of trust in the protocol, and just growth of mind share, and also exposure from various users, should they be retail or institutionals. We've seen also a growth kind of steady over the past months in the number of active stakers. I really want to reiterate what Josh mentioned earlier. It's a very unique staking experience when you stake dYdX. If you've been in the space for some time, you might be staking some Solana, some ETH, and some other assets. You usually get paid with the protocol tokens. In the case of dYdX, you get rewarded when you stake with a portion of the protocol fees collected in USDC. So essentially, when you stake your dYdX, you don't get dYdX token, you don't create more inflation for the protocol itself. It's essentially coming to your wallet every block in USDC. So I think this narrative is getting more and more understood, even though it has been applied for years now. But this brought us to about 240 plus million dYdX token, which are being staked today. And the APR on average, median, over the past semester is about 8.8%. So this really highlights this kind of value proposition of the dYdX token. When you stake the dYdX token, not only you bring security to the chain, but you also have the opportunity to participate in governance. There was more than 200 different votes the community could express its opinion on, and you get also an exposure and rewarded for your security services and rewarded in USDC. So this kind of value proposition is very unique in our space, and we see the number of token holders, but also the number of stakers growing around this narrative. On the next slide, we can touch on the stake supply. Back to you, Josh.
I don't think anything more to highlight here other than the fact that I think we're pretty happy with the amount of dYdX that is being staked so far when you compare it to the circulating supply, which sits just below 1 billion right now. As a reminder, I think staking a dYdX token among enabling you to get a pro rata portion of staking rewards, as well as to potentially participate in governance and other utilities that you're directly providing security to the network by virtue of every token stake. Just in terms of how many active stakers we have, and this is individual wallets holding dYdX and staking it, that number has been trending on the increase, which is, I think, generally positive. You know, when people are getting dYdX tokens by virtue of rewards from the Surge program that's operated by Chaos Labs, previously from, protocol level trading rewards, or whether they're going out and acquiring their dYdX tokens at a centralized exchange or via other, kind of DeFi pools, it seems like there is a definitely a healthy amount of people who are coming in and staking their tokens, which I think is, as you can see by the chart, trending in a positive direction. When we look at staking APR, obviously it is highly volatile, and that is because it is directly related to the amount of volume that the exchange is doing. Again, the volume on dYdX changes daily, hourly by macro factors, as well as, factors going on inside of the exchange. So it's very kind of difficult to calculate point in time. I think that the best thing to look at is just median APR over the course of the first half of the year was about 8.8%, which I think is extremely solid when you compare it to, as Charles mentioned, staking things like ETH. It's extremely competitive return for staking the token.
Excellent. We now expand on the buybacks. There was a lot of questions and interest on this part of the presentation last month, so we want to keep this updated and keep re-explaining to newcomers into the ecosystem how the dYdX community essentially enabled some months ago now the dYdX buyback. So since the launch of these dYdX buyback initiatives, there was about 5.3 million dYdX which were bought back. It has a market value of about $3 million. Just to refresh you and remind you how this mechanism works, 25% of the protocol fees are going directly to buybacks. So buyback program is run by the Treasury sub-DAO, which essentially go on different exchanges and OTC desks to purchase back some tokens. And those tokens are essentially, for the most part, staked back to increase the security of the chain and kind of bought and put back into the service of the chain. The next buyback, I would say season, is forecasted to buy back about 80,000 dYdX. And we project about two within the semester the second semester of this year, about a shy $2 million of buyback. So this implementation was discussed and voted by the community, and it's something which might be re-explored when the time comes. Over to you, Eddie. Very warm welcome again to this monthly call with analysts, token holders, and investors around dYdX. We are very excited to have you. We hope to have you back on a regular basis, and that would be awesome if you can maybe briefly introduce yourself, but also tell us more about what's your team has been busy with and what is coming soon.
Definitely. So I'm Eddie. I'm the president of dYdX Labs. I joined as part of the acquisition of my company, my startup in July. Before that, I had various roles. I had another company that was acquired, and I was at Facebook a long time ago at the beginning of my career. We're focused very heavily, certainly on kind of delivering a really great trading experience to our various retail and market makers. To that end, we kind of have, I think, a lot of very exciting things planned for the next month and the next quarter. Specifically, quite soon we're going to introduce Solana spot trading. That's planned for early November. In addition to that, we are adding the ability to kind of like buy and stake dYdX directly in our interface on .trade. That'll allow kind of the rewards that you have, you can use that to trade. You can obviously use that to stake, turn APR and USDC. You can also, of course, kind of like buy and sell dYdX directly our interface. We have recently introduced the ability to have scale and TWAP orders into our API, but we're adding those capabilities for advanced traders on our front end as well. Those are like long requested features that we think will allow people to trade the way they want to. We are additionally adding staking for reduced fees. This is pretty well aligned with like overall token price movement. In order to stake more token, you'll reduce your fees, and that increases kind of like staking lockup rates. And finally, we're pretty excited towards the end of Q4 to reintroduce prediction markets. We had done this in the past with the Trump election market, and there was over $100 million of volume on that trading market. And so we believe this will be a pretty unique and exciting offering for traders for an asset and for a purpose that they wouldn't have available anywhere else. And so that looks like basically a roadmap for Q4. And we're really excited about kind of all of these things to kind of create the best possible trading experience for both our retail users and our market makers.
That's amazing. So the prediction markets are back. Spot is being launched. If I remember well from the blog post you shared a few weeks back, spot trading will be open as well to the US traders, which is essentially a global launch of spot at dYdX. So very exciting. And also we discussed buyback, and it looks like you're enabling the buyback program at protocol level and bring it into the user interface for people to buy and stake dYdX directly from the front end. So really amazing roadmap. We hope you will get some time to sleep, because it looks like it's a very busy roadmap. But I know you have also excellent engineers together with you in the team. So thank you for this update. Which part of this roadmap, Eddie, is the most exciting for you? Which one is much more a response to a lot of feedback and requests from users?
Yeah, definitely. I mean, I think that I'm most excited about prediction markets. I think like offering kind of like a unique experience for consumers was kind of the reason why our like Trump election prediction market had such high interest. We kind of strive to be obviously like innovative, to build differentiated products, kind of deliver value in a way that people want. That's what we're most focused on, I think, on average, is creating things that people want. So I think we have the strongest evidence that that was really compelling for our consumers. And I think that we have a lot of improvements that we're making on the experience kind of as we bring it back. And I think that will allow an even better experience for leverage trading on prediction markets. So I'm most excited about that. I think everything on our roadmap has been directly requested by users, by people that we've like talked to, by kind of like our largest and most active users, typically speaking. And so I think the full roadmap is aligned very strongly with like what we've heard from people. And so I think like the major difference is more that we have some things that I think are like iterative improvements. We of course want like an extremely kind of like reliable and performant exchange, but we also want to have features and have products that are unique that you can't get anywhere else, or so you have to like, so you come to dYdX to trade these things. And so that's kind of the balance I think we try to strike. And you can kind of see that in our roadmap, where we believe kind of like having some of these things are like feature iterations that have been directly asked for, and some of these things will be like specifically unique to the dYdX platform. And I believe that kind of going forward, roadmap will be similar, meaning that we'll try to spend obviously like a lot of engineering resources making sure the platform is like reliable and performant, but also we want to kind of like build towards the future. And we want to build towards things that don't exist and that are exciting, that I think create unique value for people. And so that's kind of why you can see that balance in our current roadmap, and that'll be true, I think, going forward.
I can't wait to see those new features being deployed and roll out on dYdX. If you have some questions for Eddie, we have a few more slides to go through. You can leave questions in the comments below, whatever platform you're using, and I'm sure we will make some time to answer them. One recent strategic initiative at dYdX is the 7th seasons of dYdX Surge. So dYdX Surge, for context, is essentially a series of incentive programs for the traders. And when it comes to these seven seasons, it's essentially bring a fee holiday for front-end users, which are accessing dYdX via the front end on mobile or the front end on their web browsers, and this makes dYdX the cheapest place to trade in DeFi perps today. So that's a very, very exciting, and I really hope everyone captures this opportunity whenever you want to express your opinion on the market. Make sure you pick the most welcoming platform, but also the most competitive platform. And dYdX is with this search season definitely highly competitive. On the top of this fee holiday, something else came up with a $1 million reward pool for traders. So that's something also which you can really compute and input into your kind of trading strategies to enjoy the most of dYdX and the market in this new season. When it comes to API traders, which is another kind of big side of the family of dYdX, there is a 50% fee rebate. So I let you kind of navigate the different tiers. You will see that these tiers have been simplified, but essentially there is, I would say, incentive for not only the takers and the makers, but incentive also for different tiers, depending on the size of your portfolio and the size of your volume of trading. So feel free to also ask questions whenever you have on Discord, on the forum, and explore the updated documentation of dYdX to make the best of this dYdX Surge new season. Still talking about the fee tiers, some feedback from users of dYdX was about simplifying the fee tiers and trying to get them more forward. That's something which has been listened and essentially implemented. So again, if you look at those fee tier schedule, we went from 9 different tiers to 7, which essentially simplify for everyone the way for you to kind of size your trading volume on dYdX and make the best of the platform. But it also, as I mentioned earlier, dYdX is also more competitive against the centralized venues now, and essentially accommodate traders from very small portfolios, but also very much larger portfolios with maker rebates as well as lower taker fees. Again, all these updates are available online, so make sure you head to the documentation latest version. There is, I think this one maybe you will cover it, Josh, about this change at protocol level and how people can essentially trade even faster and more efficiently on dYdX.
Yeah, for sure. I think some exciting updates here that came by virtue of governance, that's community voting on implementing proposals, as well as the grants program. Two kind of key changes that I wanted to highlight. There was a designated proposer set appointed. Effectively, like what has happened is the dYdX community appointed 8 of the validators to specifically be responsible for proposing blocks on dYdX chain. This is ultimately having the effect of improving and increasing the rate at which blocks are proposed. That again, because every validator is effectively hosting an in-memory order book and needs to gossip transactions, there's a ton of benefits that come just in terms of increasing throughput and increasing block time. I think after the change went into effect, block time was hovering around, about a second, and it's down to about 60 milliseconds. So we've shaved about 40 milliseconds off, which has, been fantastic. In terms of the order entry gateway, the order entry gateway is effectively a an open source set of 5 nodes that are all peering with the designated proposers. Effectively, what this is targeted at is higher frequency traders, API traders, as well as front end traders, just because all of the order flow gets routed through there. But this is targeted at reducing latency. So having kind of a ton of throughput available for people to place orders and for those orders to be directly peered with validators. So they're not kind of pinging around the network to broader validators. So both of these kind of strategic initiatives together, I think, bring us to like a very good place in terms of throughput, latency, reliability, and block time. Super excited to see the changes take effect. All of these things have been like super recent. So I think we're going to see the actual effects, in the coming weeks.
I really invite everyone, if we can just come back to the slide before, yeah. So in a nutshell, the chain is gaining in performance. Block time is reduced by an order of magnitude. And where I invite everyone who is curious about the order entry gateway services, which is, as Josh mentioned, fairly recent. You remember that there are a lot of different ways you can contact the community and support for you to get a deeper dive into how this system works and how you can possibly optimize your trading experience at dYdX. So not only there is a documentation, but there is also Follow the Sun teams, which are available to answer your questions, to go deep into this kind of upgraded tech stack and making sure that you make the best of the platform and its upgrades. So reach out to the teams around the protocol. They are here to help you. And this week in London, I've been having conversations with high frequency and institutional traders, and I can tell you they're very excited about this new order entry gateway service. It simplifies and accelerates trading, and it just makes the algos expressing their opinion in a much more efficient manner. So deep dive on this and get some help if you need some. Another strategic initiative is what we discussed in the past, and what has been the focus of many around dYdX is distribution. Distribution, but what we mean by that is essentially not only having dYdX as the kind of eye for traders, but also having dYdX reaching users and traders where they are. And in this context, as we mentioned in the past analyst call, there was a Crypto.com partnership which has been put in place. And over the past weeks, this partnership has essentially recorded $100 million of cumulative perpetual trading volume. So it's a very strong sign that this distribution strategy is a solid and strong complement to the kind of organic volume on dYdX, and those users of dYdX via the dYdX partners are trading on the same pool as well. This kind of momentum is also kind of supported by trading competitions. Tentatively by October, November, a new Crypto.com by dYdX trading competition will be in place. From this first integration at Crypto.com, there is another integration which everyone will pay attention to, is the integration with Thorwallet. Thorwallet is a Swiss-based non-custodial DeFi super app, which has integrated with dYdX. It will be available on iOS and Android. There is a first trade campaign which will be running from November 11. I had the chance to meet a few weeks ago the founders of Thorwallet. They kind of show me their sleek UI, and I can tell you it was really kind of a very fresh and different look, but the same dYdX behind, and I was very excited about that. So I'm very confident in the success of Thorwallet, and I'm sure they're going to follow the kind of trails blazed by Crypto.com. So again, a lot of distribution efforts, a lot of efforts to grow in every possible ways the pool of traders around dYdX, and this distribution strategy is gaining momentum with a new wallet partner, Thorwallet. One more strategic initiatives. I had the chance to meet the CEO here in London of CoinRoutes. CoinRoutes has been in conversation with dYdX for several years. Essentially, what CoinRoutes does is helping hedge funds, high-frequency traders, or very sophisticated traders to route their orders in different venues for the best execution. What CoinRoutes does is essentially leveraging the revenue share program, which has been implemented at protocol level at dYdX, and will be contributing to the trading flow of dYdX. So the CoinRoutes become the first participants in this revenue share program. Their governance proposal was essentially successful, not later than this morning. So congratulations to the community for enabling this new partner around dYdX. And it's really, again, illustrates how distribution is built around dYdX and how this strategy of reaching traders where they are is being deployed. We talked a few minutes ago about wallets. We are now talking about essentially kind of very big DeFi routers for institutionals, and CoinRoutes illustrates very well this distribution strategy. So I wish all the best to the CoinRoutes teams, and we look forward to kind of review, and why not invite their CEO to join us and tell us how was their experience in a few months. One more strategic initiative, as you know, dYdX never sleeps. Permission keys are now live on the front end. So permission keys are essentially enabling you to be trading on dYdX in a very secure manner. And what it triggers as a new feature is essentially enabling trading teams to have multi-user account management. So essentially, you can get different strategies, different wallets, different type of traders or subset of your team having their own specifically designed sub-accounts, making dYdX even more an enterprise-grade infrastructure for institutionals. That's something which was asked by the community and the users, and which now is live. So again, if you have questions about how to implement that, there is multiple ways to get support. Just raise your hand, and people will come to you and get you sorted. One more strategic initiative, the Telegram trading competition. As you know, dYdX Labs acquired Eddie's company, Pocket Pro, a few months ago now. And if you haven't tried yet this trading bot on Telegram, I really invite you to. We spend a lot of time on Telegram, and some users don't even know that you can really enable, like, again, another kind of window onto the dYdX ecosystem via Telegram. Super slick UI, extremely responsive. And what I like about this kind of initiative, beyond the trading competition on top of it, is very much the social aspect of it. I like the shared PNLs, I like the emoji battles, everything around trading the majors, trading long tail assets. Again, head towards the Telegram and give a try to this Pocket Pro app. It's a very refreshing and new way maybe to invite some of your friends to join some trading competition on dYdX via Telegram. One more strategic initiative, the list goes on, the affiliate program booster. So you probably seen through governance that we've been enabling an affiliate system on dYdX some months ago now. And this affiliate program is eventually kind of constantly animated and kind of fine-tuned to accommodate the number of affiliates coming. So there are more than 600 affiliates today on dYdX. And to kind of animate this cohort of ambassadors of dYdX, there is an affiliate program booster which has been put in place. So essentially rewarding further the affiliates whenever they talk and kind of promote the dYdX protocol to their users. They are earning real-time commissions when users are connecting and using dYdX. And the top 15 affiliates share a pool of $30,000, while there is some kind of well bonus or outlier bonus as well for 20K US. The affiliate program is open. You can also reach out to the teams or via the support functions of the dYdX protocol to join this program, which is a revenue share program. So far, about 5,000 plus traders have joined dYdX thanks to this affiliate program, and more than 6 billion trading volume has been generating through the program. So that's why the protocol and the community is enabling further this program to make sure that it's making the best of the markets. So Q&A section. Maybe we can have Winnie joining.
Yeah, for sure. So we've received a couple of questions, and many of them are centered around the liquidation events that happened across the entire market last Friday. So these, I'm guessing I will pause to Eddie. The first question is, can you walk us through what triggered the dYdX chain instability during the liquidation event? Was it primarily due to on-chain congestion, validator performance, or external market volatility?
Yeah, definitely. So I think the short answer is that it was due to external market volatility. What essentially happened is on Friday, October 10th, around kind of like 5:45, 5:35 Eastern Standard Time, there was a large drop across like all market prices across many assets. And in one specific instance of like an isolated market on dYdX, it triggered an edge case on our platform that was like unforeseen and has not happened since the chain has been live. The last kind of outage of this kind happened almost 18 months ago. During that entire duration of time, this like issue had never triggered before, and it was due to like a specific condition in a specific isolated market. We since patched that. The patch kind of went out several hours after that. The team kind of like worked through the night in order to bring the chain back online on the evening of October 10th. And we'll be releasing like a full postmortem on the issues later this week.
Thank you, Eddie. There's another one that follows up on that one, which is what infrastructure or governance upgrades are being prioritized to reduce the chance of a similar event in future?
On the infrastructure side, I think the postmortem will include kind of more of the updates. We're planning a series of kind of like updates to the software to make it more resilient to kind of like large changes in external market volatility, like what happened. I don't believe that kind of like Friday is like necessarily likely to happen again, but we will make the chain resilient to it happening in the future. Governance side, I think we had some smaller issues related to kind of like restarting the chain in terms of voting power. And so like we are kind of working with dYdX Foundation to make sure that like we'd have the ability to do that at like a faster rate if anything were to happen again. I'd like to reiterate that once again, this has not happened since April 2024, so over 18 months. It's extremely unlikely to happen again. But if it were to happen again, I do think we'd be able to bring the chain back online much faster with the changes on the governance side.
Okay, we got one that was a live question. I'm not entirely sure how we received it, but it says, "Hello, everybody. Will there be an update to the dYdX interface with the integration of spot trading and other upcoming features?"
Yes, certainly. So the dYdX desktop site as well as the mobile apps will be updated to kind of include the launch of Solana spot trading. It'll likely be like on the site in a new tab, so you can kind of see like different Solana spot assets to trade in that tab. You also kind of have the ability to kind of move back and forth between your spot wallet and your perpetuals trading wallet, and that will show up kind of on like the profile screen. There's like a whole series of updates that we have planned for this. And so we are pretty excited about this, and you can kind of expect this hopefully in a few weeks.
That's all the questions on my end.
Eddie, thank you so much for making the time this week with us. Thank you, Josh and Winnie, for helping preparing this presentation. The conversation continues on social media, on the forum, and we look forward to the next monthly analyst calls of the dYdX. Make sure you subscribe to the Luna page to receive the alerts and invitations. And thanks again for your support. We talk to you soon.